What's up, traders? Anthony Crudele here, and welcome to Develop Your Edge, where each week we talk about everything from mindset, preparation, anticipation, and execution of trades. This week, I wanted to kick the show off by talking about mindset and dealing with a drawdown. Probably because I just got done dealing with a drawdown last month, and it's fresh in my mind. And I want to talk about my process for dealing with a drawdown. First, I always think of two things: self-awareness and market awareness. Then I ask myself three questions. Is it me? Is it my strategy? Or is it the market environment? Let's start off with, is it me? Let's face it, traders, we always want to blame the market. We want to blame our strategy, but rarely do we want to blame ourselves. And this past drawdown that I dealt with was on me. Let's face it, we're all on lockdown. I was up binge watching Netflix till 2 a.m., actually watching a show called Bloodline, and got up my same normal time because no matter what time I go to bed, I get up at the same time. And was just a little tired and all of a sudden found myself in a little bit of a funk during that trading session. I was just out of rhythm. And I think what's so important when we go into drawdowns is identifying whether it's ourselves, the strategy, or the market environment. And when you can identify and be honest with yourself that it is you, then it's a lot easier to fix and move forward. So when we ask ourselves those three questions, is it me? I actually was looking at the way I was executing my trades, and I just was uncomfortable. Quick to get in, quick to get out, just couldn't find any rhythm. What did I do to deal with the drawdown? Well, I took a few days off. I learned early on that when I am aware that I am just not trading good, take time off, remove myself from the screens. I actually came back that weekend and did some of my best homework and actually got myself into my best trade of the year that next week. And it really just comes down to, for me, self-awareness, being honest with myself. It was me. It was not the market. It was not my strategy. Next, I want to talk about, is it my strategy? Now, I have my strategy on TradeStation to where I could see my stats on it. If I bought and sold every level that I wanted to, I could pull those stats and review them. I think this is so important because so many traders have a strategy, but they actually don't know any stats on it. And they end up maybe having what we call strategy drift. And they say, well, this isn't working and I'm going to search for something else. Instead of just really honing in on your strategy and identifying how it's trading in certain environments. What's happening in the market right now with my strategy? And once again, it's about being honest with yourself and your strategy to identify where the problem is. And if it is your strategy and isn't working well in certain markets or in certain environments, then you know how to fix it. You can start tweaking it. I am always tweaking my strategy. And let's face it, markets are always changing. So it's important to identify if you get into a drawdown that's your strategy, then go back to the drawing board, figure out a better way to execute it. So that's how I deal with drawdowns when it's my strategy. Next, is it the market environment? Well, this kind of works with, is it my strategy? Because a lot of times we focus so much on just getting in and getting out of trade signals that we get that we don't look at the overall environment of the market. I actually put a tweet out this past week that said, you know what, I had to start trading a little bit smaller because things weren't working well for me. And it was really because the environment changed. Let's face it, we went from being very busy, the VIX has come down, markets had much wider ranges. I had to manage my expectations, meaning that maybe I'm not going to get a huge move out of some of these buy or sell signals that I'm getting. Markets got a little bit tighter, a little bit choppier. I also noticed that the environment was just getting to where we had a lot of divergence. NASDAQ is going up, and then you had Russell and Dow that were weak. S&P was in the middle, which is what I primarily trade. And it was just caught in this kind of a chop. And I felt that it was really not conducive to my strategy. So trade smaller, trade smarter, wait for confirmations. And I think a lot of us will force trades. And I always say great traders don't force trade, they're forced to trade during an environment that just maybe doesn't work well for our strategy. At the beginning, I said there's two things, self-awareness and market awareness. If you're aware that it's you or you're aware that it's the market, you are able to move forward and make the adjustment. We're always making adjustments. That's why we're always developing our edges. So if you're getting into a drawdown, always ask yourself those 3 questions. Is it me? Is it my strategy? Or is it the market environment? Next, I want to talk about Bollinger Bands with you and how I use them in my strategy. I'll be back in 30 seconds.
24/7 access to diverse global markets. Right here.
That's why I added stock index futures to my trading strategy. Now when I see ups and downs coming, I'm ready.
Well played.
Why trade with TradeStation? It's innovative, easy to use, and totally freaking sweet. With powerful tools to track and execute your trades and low per trade commissions on stocks, futures, and options. Upgrade your trade at TradeStation.com.
Welcome back, traders. I now want to show you how I use Bollinger Bands in my strategy. First, I want to tell you why I use Bollinger Bands. Well, going back to the beginning of my career when I was developing my strategy, as I was trading, I was finding my strengths and my weaknesses. I had a lot of weaknesses, but one of my primary weaknesses was stepping in front of one-way markets, stepping in front of freight trains. Basically, where markets would be going one way the entire day, and I would get picked apart trying to either sell it or buy it, depending on which direction we were going. And the market just kept going in that one direction. And when I would go back and look at my biggest drawdowns and just my worst days were days where the market just kept going in one direction without any reversion back to the mean. So what did I do to fix that with Bollinger Bands? Well, let's take a look at the charts. Now, I mentioned my weakness was stepping in front of one-way markets. I was sitting back, doing my homework, pulling up Bollinger Bands, other indicators to find out what could prevent me from stepping in front of a one-way market. And here's what I came up with. So this is an E-Mini S&P 60-minute chart here on TradeStation. And what I did was I just drew horizontal lines on these 2 Bollinger Band peaks. Now, when the markets started to go in a direction, this particular instance, we started to go up, okay? When I would notice that the top Bollinger Band on an upward market would take out that previous peak and it would stay pointing up, that was a strong indication to me that I would not want to step in and get short. Until when? Until the market would make a peak and then revert back down. Remember, it's not about picking tops or bottoms, everybody. It's just about finding ways to keep me out of bad trades. So let me move the horizontal line up there, and let me move it up to that new kind of bottom peak. So what I was thinking was, okay, at that point, when it started to point down, at least I felt, okay, I could step in here now and either trade both sides or even be short. It felt to me that when I started to see those, and over again, I'm going to go over this whole sequence here, that once the Bollinger Bands reverted back in, both the bottom and the top, in any directional market, I felt that we were kind of boxed in. So I felt a lot more comfortable going to my shorter term charts to either fade a move or step in and trade both sides. Now, let's take you to this recent sell-off. And I want to show you something that I think is extremely important as to how they helped me, specifically in this week. We made a higher high in the Bollinger Band there. You could see that it made a peak. Okay, market's going down. We took out that previous peak. And then all of a sudden the Bollinger Band, let me just move it up so you could see it, went up, made a new peak, and then started coming down. But as you could see right here, okay, the market took out that previous peak where it was kind of boxed in. And when I saw that this bottom Bollinger Band was just screaming lower, pointing down, I said, you know what? I can't step in and buy this market. I'm going to continue to look for shorts until when? Until the bottom Bollinger Band reverts back up like it did right there. So let's go back to, actually, let me move this line down here because I think this is important just to look at going forward. Now, the markets have, they made a little bit of a low here. They started to go back up. Like I said, it's not about picking tops or bottoms. It's about saying, okay, I could step in and trade both sides. The Bollinger Bands have boxed us in. Maybe this trend will start reverting back. And it did here. Bollinger Bands started to move up. Obviously, markets are moving up. They'll probably do that. Not always, but they'll start to expand at times as well. But I was watching to see, okay, if we start going up, are we going to take out this peak? And we did right here. And we still kind of were just grinding lower on the bottom Bollinger Band. We kept going up and up and up. So during this time, I'm saying, okay, very, very weary, okay, of being short. They continue to go higher. Bollinger Bands keep making higher peaks. And I'm going to take you to this peak right here because I want to show you something that I looked at. And as they kept doing that, it was indicating to me that, okay, if the Bollinger Bands keep taking out those prior peaks, we're expanding volatility to the upside. And the only time I'm going to step in and take any shorts, once again, is when the Bollinger Bands revert back down and the bottom is reverting back up. So in this particular instance, we just were kind of going sideways and choppy. I talked about that a little bit on Twitter this week as well, that the markets were just in this kind of chop mode. But bring us to where we are right now here, Friday afternoon. And you can see that the top Bollinger Band now is starting to come in a little bit. So we spent a lot of time at these prices. We're sitting at 29.15 roughly right now. And we're starting to see that bottom, the top Bollinger come back down, and that bottom Bollinger is still kind of grinding back up. It's not really a clean boxed in scenario, but at least at this point now, maybe if I had a short signal, I would say, okay, now maybe I can step back in. Once again, it's not the strongest signal in the world, but you get my point. The point of the matter is you have to put things into your strategy that keep you out of bad trades. Because to me, one of the most important ways that I was able to actually grow my P&L was not really finding winning trades. I think we all can find a way to find winning trades, but it was about keeping me out of a lot of bad trades, taking my weaknesses, the days where I was just trading terrible, and I would go, oh, well, that's what my strategy's telling me. It's giving me a short. When I found these Bollinger Bands on the 60-minute and whether they were contracting or expanding, it really just allowed me to have the freedom to say no or yes on a particular trade. So that's why I use Bollinger Bands in my strategy. Next up, I'm going to give you my final thoughts on the market and everything we talked about today. Final thoughts for today, traders. We talked about dealing with drawdowns, self-awareness, market awareness. Is it me? Is it the market? Is it the environment? For me, in my experience, dealing with drawdowns really comes down to identifying what the issue is. The sooner the better, because the longer it goes, the more things it could be and the more complicated it gets. And it really just comes down to being honest with ourselves. As traders, we have to be honest with ourselves because once we identify what the issue is, that gives us a clear path to fixing it and moving forward. And we always have to be moving forward as traders. Next, I want to talk about developing our edge with our strategies. I talked about how I use Bollinger Bands in my strategy. Now, Bollinger Bands aren't getting me into trades, but they're keeping me out of some bad ones. And it's not perfect. Nothing is. But when I went back and talked about at the beginning of my career, I wasn't having trouble finding good trades. I was having trouble staying out of some bad ones. So I was focused on my weaknesses and putting something in visually that would tell me yes or no, because it really just comes down to confidence. I needed to see something visually that told me you can step in now or you shouldn't step in. And like I said, nothing is perfect. But when you're building your strategy, don't just focus on finding good entries. Look at other things, other tools to help keep you out of some bad trades. Now, as you all know, the show is sponsored by CME Group. And if you want to go and check out activetrader.cmegroup.com, which I highly recommend, they have great content on there. Why trade futures? Why options on futures? Products, trading insights, and subscribe to their In Focus letter. I'm at this site all the time. They have a bunch of great tools for new traders and for veteran traders, so I highly recommend you check it out. That's a wrap for this week, traders. Thank you so much for tuning into this episode of Develop Your Edge. If you have any questions or comments, please put them down below in YouTube, and I'll be sure to get to all of them. You could also follow me on Twitter at Anthony Crudele. That does it for today. See you next week.